Good morning YouTube and welcome to a brand new video. As you can see, this video is about entries. I have got a lot of requests for a video on entries, and I think that's one of the most asked questions as well. How do I enter? Where do I find entries? How do I know where to enter? So we can do a lot of videos on this. So as you can see, this is just part 1. So please ask your questions in the comments down below, but also remember that this is part 1, and part 1, if we say part 1, that probably means there's going to be a part 2 as well in the future. So stay tuned for that. So for that reason, turn on notifications and the bell notifications and subscribe. And remember to like this video. So first of all, we're going to look at reversals. So I'm first going to be drawing, and then we'll probably look at some examples on the charts as well. So two things that we need to look at. The number one is that we have our zone. A zone where we want to see price reverse. This could be one of 3 things for me. This could be a old high or low. This could be some imbalance, or this could be an order block. So those are the things that I'm looking at for potentially for price to reverse at, and those are the areas that I'm concerned with and that I'm looking at on my charts to see if we get any reaction from those areas. So this is either an old high, low, imbalance, or block. Doesn't matter. The point is what happens in this area. So when we see price reaching, coming into this area, you can either be aggressive and take the sell. So we have price coming up into this area. So now you can say, okay, I'm going to take the sell. I have faith in the zone. I have a slight stop loss above it, or maybe a few pips above it, and I'm targeting something down below. The problem with this is that sometimes it will work and sometimes it won't, because price could just make a pullback and then continue up higher, and we can have a fake out or a liquidity grab. Maybe a better scenario is price reacts off of it, comes back, creates a double top, then we see a pullback. We don't break the structure yet, then we see price going up higher. What does this mean? That this means the price then took the liquidity above the double top, like this. Then you get stopped out. You haven't waited for confirmation. We need to wait for price to first break down most recent structure, then look for the pullback into a zone, i.e. old high low, imbalanced order block, and then look for the long towards the downside. So let's say now in this zone, let's make it a bit bigger now. There's maybe a smaller zone. Now we identified that, we place our entry over there. Our stop loss is now safe above the most recent structure high, and then we target something towards the downside. So this is important. We build the narrative. We see now we have a structure break towards the downside. There is our structure break. We had some liquidity over here. That liquidity has been taken, but we can just say liquidity. Now we can see that we are starting to see a pattern forming, and that is then when we execute, when we see this forming. We can even be more conservative, and we can wait for a second return. So there we have a zone, and then price creates a new zone with a new order block, and then we can simply just wait for price to return to this zone as a scale in position and take the trade towards the downside. This is your safest, most confirmed trade entry position, and often it has the tightest stop loss, because we just need to place our stop above the most recent structure to the left, and that is then where we get our entry, our second entry, or a scaling entry, or our first entry. So this is the safe way of taking entries, instead of just looking to take that aggressive entry and you're not sure where exactly to place. If you place your stop big enough, it's fine, you might be safe and price does not tap you in, tag you out, but do remember that you're not exactly sure where that sweep is going to end and you might get stopped out. So it's always better to wait for price to give us multiple confirmations, looking for price to shift towards the downside. We want to see the character of the market change in our favor before we look to participate in the market. Let's look at some continuation setups. I have alluded to this a few times in my other YouTube videos, in the morning analysis, and in different cases, and I want to speak about it again. When we have a valid zone, don't care what happened before, but we are in a trend moving towards the downside. We created a zone, we're now waiting for price to come back to this area. This could be the 1 hour, 50 minutes, 5 minutes, 1 minute, daily, it doesn't matter. What matters is what I'm going to show you next. First of all, we need to see a strong impulse move. This move needs to be strong and an impulse. So we want to see this as an impulse move. So let's just say an impulse move. It shouldn't be weak, it should be a strong move towards the downside or the upside depending on the direction. But we want to see it impulsively moving, not slow candles, big decisive candles moving towards the downside. That's first of all very important. Second of all, we would like to see this candle. Where's my arrow? Sorry, this zone. This is a bit technical, but I would like to see this as a full body candle, not a doji or too many wicks, but a full body candle within this range, within this sideways moving market over here. We want to see a full body candle. Then thirdly, we want to see price return to that area, and how we return is also important. Slower than we went towards the downside. We want to see price slowly getting back to this area, maybe creating double top, then the same as in the example above, looking for that shift in structure, shift in character. So what does this mean? What does this slow moving market mean going towards the upside? That basically means that the market is more intent on going towards the downside, bearish, selling, than it is going towards the upside. So let's look at it in plain example as you would explain it to a 10-year-old child. Price wants to go down, price is struggling to go up. So when price is struggling to go up and it reaches an area we would like to sell, we have more confidence that when we reach an area we would look to sell, price will then impulsively or with the same momentum that it originated move down towards the downside. So then we have another possible impulse move towards the downside. And what we can look at over here, we want to see price slowly correcting. So you want to slow correcting or return like that. A slow correcting and a slow return towards our sell area. So those are some of the important aspects that we want to see when looking for an entry in a continuation scenario, in a continuation market. Then of course the same things apply. We want to see price creating some liquidity over there. We want to see that sweep of the liquidity, then price breaking down. Breaking this point is very important because price could just make a higher low and then continue up higher, and then you get stuck. And you don't want that. You want to first see the confirmation, the evidence that price has changed its character and it's moving towards the downside now. So that's why when we want to see this structure break, maybe another structure break, and then a return towards that order block. Again, this return also, if we just look at this part quickly, we want to see price moving down and a bit slower, come back towards our order block and then go down lower. That's over there. The same thing in the bigger picture we want to see in the smaller picture on the smaller time frames as well. So we're just going to quickly look at one or two examples and then we'll wrap it up. Here we have our first example on GU. We have our order block, a potential sell area. We have a strong impulse towards the downside, strong impulse move, we have a clean structure break, body closes below, and then we have price slowly correcting, slowly coming back. We have this move, but this is just a London Open manipulation and a grab on liquidity, and then we see price coming back impulsively into our area. That's fine, that's also just the session opening manipulation, so we don't worry about that. This is the important part, and this is the important part. Our price impulsively moves down and then correctively starts to come back towards the upside. Now let's just jump quickly to a lower time frame and look at what happens within within this area. On the 1 minute, we can see price moving into our area, and then we see price starts to push down and push down again. We see price go up, go, and then we start push down, breaking structure. We create a zone, we break out of that zone, we mitigate it, and we go down lower. We have now this zone, price pulls back into our zone and pushes down lower. Again, we have a break. Let's get that back. In we have a structure break. We have a zone over there. And here we have another entry. We place stop loss just above that wick, 2.4 pips, and we can take profits down at the lows, previous lows for that order block over there. And you can see that by just being patient and waiting for an entry, by observing the flow changing, the order flow changing, the character change of the market, we identified early on. So remember, we have to be in a high time frame area of interest, in a high time frame area where we would look to sell. Then we simply wait for price to show us a change in character, show us how price is now moving towards the downside and the character has changed. We're not making bullish impulsive moves anymore. Instead, we're making bearish moves towards the downside, and we're just waiting for the cleanest opportunity, which we have over here, for an entry, and we take that trade towards the downside. So this requires a lot of patience. This requires you to wait, sit on your hands, and do nothing for a long period of time until you have everything aligning perfectly and you can take the trade. Hope that makes sense, and I hope you've learned something. Let me know in the comments down below. Subscribe for more, and yes, see you guys in the next one. Have a great day. Bye.